India's largest IT services company, TCS, announces fourth quarter earnings. The revenue and margins in quarter 4 are in line with street estimates. The IT behemoth closed FY22 with an all-time high order book at $11.3 billion. Signed 2 mega deals of roughly $1 billion in Q4. Though the attrition rate was high in FY22 as it climbed to 17.8%, the company did also manage to add over 1 lakh employees in the financial year. The company will be paying 22 rupees per share as dividend to investors. In Q4, the revenue saw an exponential rise of 15.8% year-on-year, and net profit was up 7.4% as compared to the previous year.
Number of customers from whom we make more than $100 million of revenue a year has increased 10 to reach 58. And similar growth across revenue bands is seen across our entire customer portfolio. From our talent and employee perspective, this has been again a strong year of headcount additions, both at a quarter level as well as for the year. We are ending the year with a net headcount addition of more than 100,000 associates at 592,000 associates as we close the year. Attrition continues to tick up on an absolute basis, but from a percentage basis it is starting to flatten, and we are hopeful that it will start flattening further. In TCS has the industry's best retention rates, and we continue to maintain that lead. Our attrition for the year is coming in at 17.4%.
Markets opened the week on a muted note. Tepid global sentiment and rising bond yields dented the rally in equities. Sensex down 483 points, ending below 59,000. Nifty declined about 100 odd points from the day's high to shut shop at 17,674. 30 of the 50 Nifty counters ended in the negative zone. Losses in financials and IT shares pulled the headline indices lower, though gains in metal shares lent some support. Broader markets strengthened, with the Nifty mid-cap and small-cap gaining for the third straight session. IT stocks languishing in red ahead of the March quarter earnings. HCL Tech, Infy, L&T, Wipro and SBI Life, some of the top laggards in trade today. On the upside, Grasim, Adani Ports, JSW Steel, Cipla, Apollo Hospitals, some of the gainers in trade. Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets today taking a bit of a nosedive. Do you feel this is nervousness ahead of those tech earnings, or something else, perhaps continuing to see the overall macro scenario weighing heavy? What do you feel are the triggers that the market is responding to?
I think you're right, Abha. I think there's a little bit of nervousness ahead of the earnings this time around, because one gets the feeling that this time the earnings season will not be that great. It's not that it will come as a surprise to the market, because I guess most investors know that the last quarter was not exactly great. So we might have a fairly lopsided kind of an earnings picture, because there is some global slowdown. Commodity prices had gone up quite a bit in the previous quarter, and you will probably see it reflected in the margins of many companies. So we might easily have a very lopsided kind of an earnings quarter this time, where some of the commodity companies might deliver very good numbers, and that may lift the overall Sensex and Nifty earnings. But I think many companies will probably disappoint on their earnings front, and that is something which the market is cognizant about and probably even a little nervous about. What we need to see at the end of April and beginning of May is what is the extent of earnings cuts, expectation being brought down after this quarter, and that might determine where the markets end the month of April. As such, I think the last couple of weeks have been remarkably well behaved for the market. We had a massive pullback all the way up to 18,000 plus for the Nifty, and from there the market might have felt it's got a bit ahead of itself, and we've seen some of the steam blowing off, with the Nifty losing about 300-400 points from the top. And I think it's doing the right thing going into the earnings slightly light, because the market does appear a little overvalued on the kind of earnings expectations we have at this point in time. So right now the market is consolidating, but I think it should not come as a surprise if there's a bit more downside as we wait through this earnings season.